All right, and we are live again. So last night, Dow futures were down until the Bank of Japan issued another statement before Japanese stock markets opened. And Japanese stock markets, if you're not familiar with the Nikkei, Nikkei 225, it was in a very clear downtrend since Tuesday, February 25th. I'm looking at a chart here. It was at 22,688, and it had collapsed over 2,000 points in under 10 days. So by March 2nd, today, the Nikkei was down significantly. It was, according to this according to this Japan Times article that I have up there on the screen, the Tokyo stocks plunged last week. The benchmark Nikkei 225 average lost more than 2,200 points, its biggest weekly fall since October 2008 when the global financial crisis struck. So the Bank of Japan issued an emergency statement, and they said that they will, quote, closely monitor future developments and will strive to provide ample liquidity and ensure stability in financial markets through appropriate market operations and asset purchases. Now, no one knows exactly how much they left it intentionally, I guess, kind of vague. I have a number of different articles up here talking about how vague it is. It says in the Japan Times article, but its statement didn't clarify the range of measures the Bank of Japan might employ. The central bank could also ramp up purchases of other assets, such as exchange-traded funds, or conduct other emergency operations to secure liquidity to maintain stability in Japan's markets. Kuroda's pledge and subsequent offer pushed Japanese stocks back toward positive ground and weakened the yen. Quote, the Fed statement and a plunge in stock markets pushed Kuroda to issue the statement, said Nomi Muguruma, a senior market economist at Mitsubishi J. Morgan Stanley Securities. I guess that's one of maybe a joint venture Morgan Stanley's has in Japan. She said the bond operation was a signal to show the Bank of Japan's willingness to take action, but characterized it as a preemptive move. So the Bank of Japan quickly showed what kind of action it's willing to take by offering to buy 500 billion yen, or about 4.6 billion in government bonds, with a repurchase agreement or repo to provide liquidity to market participants. Also, Zero Hedge followed this up, that they are buying a record 101 billion yen in ETFs, exchange traded funds. And that is why the Nikkei stabilized around 9 a.m. looks like. The free fall in the Japanese stock market stopped around 9 a.m. on Monday, March 2nd. However, I will add that this announcement from the Bank of Japan has other markets up significantly more. I think there was a short covering rally or short squeeze. There were traders that were short, maybe in the futures, and when the Bank of Japan statement came out, they closed. Maybe these high-frequency trading algorithms. So some of these other stock markets are up a lot more than the Japan stock market with the Japan announcement. So it looks like these global macro traders are closing out some short positions or maybe going long other stock markets in other countries, anticipating that there will be a coordinated global central bank action. And there was a CNBC Europe article that came out by Elliott Smith a couple hours ago that global central banks hint at action after the Cerveza problem sparks market rout. So the European Central Bank said Monday that it, quote, stands ready to adjust all its instruments as appropriate. And that is why the Dow is up significantly today. The oil price, I think, is up. It did pop at least 1%. It did pop over 5% at one point. I think it's about 4% up now. Let me take a look at the chart. It's a little over 4% still for oil rally. Probably short covering or a short squeeze. Although there's still a lot of fundamental problems in the oil market, this could just be a temporary rally. There's still a lot of problems in the oil market, and we're seeing a lot of information come out. Cerveza problems, a lot more people getting infected and sick. Then there was a news story I saw in the last 24 hours that the state of Washington knew that there was, for at least 6 weeks, there's at least 1,500 more cases in the state of Washington. So, I mean, this was in hindsight, this was predictable. So let me read this. Bank of Japan buys record stock market ETFs. Remember, the Bank of Japan has already bought an enormous amount of stock market exchange traded funds. While over the past 24 hours, the Federal Reserve appears to have gotten cold feet about intervening in the market and or cutting rates, the Japanese peer had no such misgivings, and these global central banks coordinate. So maybe the Fed decided it couldn't do it right away, but Japan made an announcement, and clearly it's having an effect on other Asian stock markets, and it's having an effect on the U.S. stock market, the Japanese announcement. As a reminder, Friday saw Fed Chairman Powell step in with a rare public statement in which he stated that, quote, the CV poses evolving risk to economic activity. Probably since I said the initials, this video will be demonetized now. That's how ridiculous things are. Economic activity. Federal Reserve is closely monitoring developments and their implications for the economic outlook. We will use our tools and act as appropriate to support the economy. And yet, despite the Greenspan playbook preview, which helped send U.S. stocks soaring in the last minutes of Friday trading, Powell didn't actually do anything over the weekend as the whispers had it. His Bank of Japan colleague, Haruhiko Kuroda, however, was far more aggressive, and on Monday morning, the Bank of Japan came out. Well, there's a bad spelling here. They misspelled it. There's a Kofefe level spelling here in the Zero Hedge article. Clearly, they need to get an editor, a better, higher-paying editor. Came out and made clear that it, too, has noticed that things are not going well, and recall Japan was already in recession, which today's Q4 capex data at -5% only underlines, and said that the Bank of Japan would closely monitor future developments. More importantly, however, besides mere jawboning, the Bank of Japan did, in fact, step in to stabilize markets, and with the Nikkei opening sharply lower, the Bank of Japan unleashed a record stock market intervention and bought a record amount of Japanese stock market ETFs on Monday, central bank data showed. Indeed, according to Reuters, on top of its small daily purchase of ETFs targeted to ensure companies' capital spendings, the Bank of Japan bought 100.2 billion yen or 926 million of ETFs, much larger than the 70 to 74 billion yen it habitually buys. And if I remember correctly, the Bank of Japan... Oh, okay, it's here in the next paragraph. I was going to say that the Bank of Japan owns about 70% of their stock market ETFs, but it's higher than that now. The Bank of Japan's panicked attempt to stabilize the market takes place 3 months after we reported that the Japanese central bank would start lending out exchange-traded funds to prevent a market freeze as a result of its relentless purchases. And as the market literally runs out of exchange-traded funds to purchase and keep systemic liquidity ample. The problem, the Bank of Japan already owns, this is insane, folks, already owns nearly 80% of the country's stock market ETFs, exchange trade funds, the result of a program that began in 2010 and ramped up in 2013. And with every incremental purchase, not only does the stock of existing exchange-traded funds shrink, but incremental Bank of Japan intervention threatens to tip over the market into an illiquid crunch. Of course, the Bank of Japan can, quote, fix this issue by simply expanding its universe of eligible securities to also include single stocks, which is inevitable now that the Cerveza problem pandemic threatens to transform Japan's... Oh, by the way, Fox News is reporting, don't know if you guys saw this, but Fox News is reporting that a leaked Pentagon document that in the next 30 days, the U.S. military is preparing for a much worse global pandemic. So they're talking about that on Fox News. I saw that in the last hour. Okay, coronavirus... oh, well, they were going to demonetize it anyway. That was an accident. Oh, well. Didn't have my coffee yet. Pandemic threatens to transform Japan's garden variety recession. Thankfully, I have enough patrons. It doesn't really matter at this point. It's growing so rapidly now. I'm adding a couple a day. Garden variety recession into a depression. Until then, however, for all those asking why futures aren't far lower, thank Kuroda, whose central bank once again demonstrates that the only thing that matters is stocks. I would say that is not the only thing that matters. The only thing that matters is central bank intervention, which then you have the talking heads on CNBC, on Bloomberg, on Fox News, on Fox Business, all try to come up with fundamental justifications for why the stock market is rallying. And I had I overheard yesterday when I was having dinner at a fast casual taco restaurant around here, a very weird conversation with 3 boomers that were ready to retire, 2 women and 1 man, and they were discussing how great it was that the stock market rallied on Friday into the close at 3:44 p.m. They didn't seem very financially savvy. They just seemed glad that their retirement accounts weren't shitting the bed. So this is, unfortunately, including my parents, a lot of baby boomers don't care if the stock market is manipulated higher, don't care if the central bankers issue these statements, don't care what the central bankers buy, as long as their retirement portfolios look good. My generation, totally freaking screwed. And unfortunately, I could see why a lot of people, younger people who have a vote, are looking at this and saying, why are the boomers getting bailed out? And I can't afford asset prices, I can't buy a car, I'm stuck with student loan debt, not going to be able to buy a house. And that's why people rationalize socialism. That's why one of the reasons why Bernie Sanders is so popular. Because of the wealth inequality that central banks have driven. Not capitalism, central bankers. Capitalism's getting blamed, of course. It's not really at fault. Central bankers are the real culprits. These massive interventionist programs to make sure the baby boomers have high real estate prices, high bond prices, high stock prices, so that they can at least have somewhat of a retirement, even though their income's being taken away and their standard of living is still falling every couple years. In the Western world, at least. Welcome to dystopia. And that's why you have age warfare. That's why you have so many arguments now of people of different ages, voters. Okay, let me just wrap up things here. Got a couple more things I wanted to talk about. The dollar index is barely above 97 now. It's been correcting for the last 4 or 5 days. Dollar index is, let me hit the refresh button. It says 97.3, but that was like a few minutes ago. Let me make sure. The VIX is down significantly. Probably people took some profits off the table on the VIX. A lot of traders do not want to be buying VIX, long VIX, buying calls on the VIX if central bankers are going to start changing the rules with more and more intervention, because that means then that the leverage short volatility trade is going to come back, the VIX is going to get knocked down, and the attempt to rally stock markets in spite of fundamental problems in the economy. I haven't seen any evidence that the economy fundamentally is improving. Just that central bankers don't want asset prices falling. So with help from Japan, the Dow is now rallied. It was over 3% rally. It's still over 26,000. The NASDAQ is still nowhere near 9,000 yet, but we'll see what other interventionist programs the central bankers will come up with to try to boost those back up. The S&P 500 did get back above 3,000. Gold prices are almost back up. Let me pull this up here. Gold prices are, I think, almost back up to 1,600. Yeah, just short of 1,600. Silver got absolutely smashed. Silver's below 17. Youch. Silver's just the whipping boy. There is a number of new pieces of content behind the paywall on my Patreon. A piece about the copper market, some interesting research there. After Nolan Watson did an interview last week for Kitco, got me thinking more, did some more research on that. So there's a piece there for Patreon account contributors. My over 300 now, getting a couple people signing up per day, pretty amazing. And I put out some new charts too early this morning on some industries that, things do get worse in the real economy. Pervasive problems, coronavirus. Those industries, the charts are looking really, really bad. They've already had some corrections. They could crash. We could see sales revenue dropping like a rock, and then earnings would also fall. Who knows what the central planners, the interventionists would do. But from a fundamental standpoint, I don't see those businesses. Those businesses are going to have a rough go of it with travel bans, people voluntarily not wanting to take international flights, people not wanting to travel, people working from home, and how we're already seeing with, Americans would call it soccer matches, but in Europe, it's a football match. Football matches in Europe they're not allowing fans to watch in the stands. So the players are allowed to play on the field and the fans aren't allowed to attend the football matches. And then also some hockey games too, from what I hear in Europe. So if those things happen, and there's also rumors too about the NCAA tournament here in the US, which is a very big college basketball tournament that's going to be coming up, in the next couple weeks. that they may play some of those games with no fans there. There's rumors going around. A friend of mine who's very big into sports was just telling me that last 24 hours. I don't remember where he heard that. He didn't tell me where he heard that, but he pays attention to all these sports websites and podcasts and blogs, and he was just telling me that they already have a contingency plan in place. So the Fed did not have to do anything yet. Oh, the other thing I wanted to bring up was the yield on the a yield on the 10-year U.S. Treasury. That is barely above 1%. So that is at 1.082. So money is still retreating into 10-year U.S. Treasury. The VIX has calmed down a bit. The whack-a-mole game worked today. The leverage short vol players. As far as I know, another one of the VIX exchange traded funds or exchange trade notes did not blow up yet. Another one did not. I have some articles to talk about with the credit markets and junk bond markets. I'll do that on another show. But over the last week or so, the credit markets, the junk bond markets, we're starting to see a lot of signals of things freezing up again. Very, very similarly to November 2018 and December 2018. So if you do not remember the timeline back then, what happened then was General Electric had a credit downgrade. They had balance sheet problems, credit downgrade. This was way before Harry Markopoulos's report over this past summer. And so their credit was downgraded. People started looking at their balance sheet. And then the junk bond market froze up for about 40 days. Danielle DiMartino Booth covers this extensively. And then as the credit markets were freezing up, there was not as many share buybacks. And the Fed was also raising rates still. And that caused almost a 20% stock market correction. So things were looking very, very bad. And then you had the botched press release that U.S. Treasury Secretary Steve Mnuchin put out on Christmas Eve 2018, talking about the plunge protection team, the U.S. Treasury, the alphabet soup of banking regulators like the FDIC and some of these others, and the Federal Reserve. He actually mentioned the plunge protection team by name there. We're all going to need to coordinate things, and magically the stock market, within, I think, a couple weeks, had already started to rally a lot again. Okay, so I think that's enough for this short little video. I want to thank everyone for listening. Thank you very much to my over 300 Patreon account contributors. I think it's over 350 now. A couple new people are signing up per day. It's really awesome. $5 a month. If you want to check out the audio podcast, some of the chart work, and the written articles that I've been doing now for months behind the paywall there. Thank you very much to my 10 or so monthly PayPal contributors and people throw me a tip once in a while with cryptocurrency. It's much appreciated. I am going to be cutting down, at least temporarily, on the time amount for these live chats. So instead of answering listener questions and answers, I will read some of the live chat comments and the comments below videos. And if a lot of people are asking the same questions rather than answering them for free, what I will do then is I will put, because I'm getting a lot of complaints about these videos are too long, I will instead put the answers. If people have a lot of the same types of questions, I will put those answers in audio, podcast, or article. I'll just put them behind my paywall on my Patreon account. So that's probably more efficient for everyone rather than answering the same question a bunch of times. Okay, everyone, have a great week. It'll be interesting to see what other stuff the central banks decide to do. Really, the Bank of Japan has not done a lot. And look at the return on just a press release that the Bank of Japan was able to help out other Asian stock markets and the U.S. stock market with. So the Fed didn't even have to do anything yet. As far as we know, they didn't have to do anything yet. So there's definitely coordination going on behind the scenes, because this CNBC article that came out today from Elliott Smith, and it'll be in the information and description section, talking about global central bank intervention. I think the Market Watch article that I have up here I didn't talk about. I think it's also talking about global central bank coordination too as well.